Aloha from Maui and good morning, everyone. There's not much else I can say about the market that I haven't been saying for weeks on end now. However, now we're in kind of a critical overbought situation. The NASDAQ and NASDAQ 100 both have the relative strength index 14s above 80. The Dow Jones Industrial Average and SP 500 are right around 78, so they're almost in extremely overbought territory. And the Russell 2000 has entered overbought territory. Now, stocks and stock indexes can obviously stay overbought way longer than shorts can stay solvent. But it's at this point where you need to start being aware, hey, this is ridiculous. We've come too far, too fast. 7 straight days up in a row, basically straight up since the election. And now if you look at this chart here on the NASDAQ, you can see, if you look at this uptrend channel that I've drawn since that election, you can see that not only are we at the top of it, but we've busted through the upper trend line. Historically, what it says is that when you break through the upper trend line, you need to then hold on the upper trend line to go parabolic. If we come back below the lower trend line, then that means normally you go down and you test this. And I could easily then see the 50-day moving average coming in play. But the bottom line is we're extended, we're overbought, things look a little sketchy out there. And really quick, just looking Dow Jones Industrial Average, a more broader, larger channel line, as you can see here, kind of cutting through these little November lows, though. You see the lower trend line, see the upper trend line. 1 touch, 2 touch, and now we're at a 3rd touch. We're at the upper part of the trend line. And as you can see, a long way to go before we get to the 50-day moving average or that trend line bottom or the 200-day moving average. So now it's time to be a little bit worried and cautious. And another hint that we're probably too far extended, 0 long signals this evening. The 3 best long signals that I like, CTT, earnings tomorrow, True, earnings tomorrow, and then CHTR. I don't have anything written in front of me. I'm going all off memory. CHTR also has earnings tomorrow. So this is my favorite setup. Can't take it, has earnings. This is my second favorite setup. Can't take it, has earnings. This is my third favorite setup. Can't take it, has earnings. So what are the new long positions? Well, while the market was up on Wednesday, the VIX jumped 11%. The fear trade showed up despite the NASDAQ finishing up 0.64%, the SPY finishing up 0.52%, and the Russell 2000 finishing up 0.60%. So that's a big, like, what the heck's going on out there, red flag. So I obey that whenever I see it. And then in my ETF scan, whoops, UVXY, you can see that little surge, see that volume surge today, see that BOP surge, see that reversal after a long period of downtrending into oversold territory. That's a long signal. UVXY was in my ETF scan, was confirmed in my price volume BOP scan, and in my tertiary scan. VIIX, exact same thing. Long downtrending. This is short-term volatility. And then all of a sudden today, big bounce, big volume, big BOP surge. Remember, all of this coming with the market finishing up on the day. Hint, hint, hint. Overextended market breaking outside of its trend line, yet the VIX is jumping. That tells me that the market is trying to forecast that it wants to go lower now short-term than higher. So UVXY, VIIX are both going to be 2% long positions for my account capital. VIIX, the final cut loss level is today's low a day, 567. For UVXY, it's going to be 1849. Now remember how I use these. If I buy 100 shares, it's only 50 shares. Then if it breaks the next day lows, 25 shares. Then it breaks the next day's lows, 13, until I get to 5 shares, and then I sell everything out. What's so funny is that this has always worked, except for recently, the last 3 times I've implemented it, which is just going to show you how strong the market is. Right here, it didn't work. Right here, it didn't work. And right here, it didn't work. So it hasn't worked in the short term, but eventually it works. And when it works, it really works, because these instruments, this is like a major insurance policy against a hard market reversal. So UVXY, I got to take using the low a day. Same with VIIX, but sadly, today, all my trailing stops. Funny story. UVXY traded below 1873 today and triggered my absolute final cut loss level on my end. Now, UVXY has been a full sell signal for a long time. Same with TVIX, but with TVIX, it cut today's low day for yesterday's low day 406. Now the new low day is 4. I still have 10 shares of TVIX. So I still have 10 shares of TVIX. Not sure because my platforms aren't open right now, but I still have SOXS as a hedge. And I still have SCO in my margin account because my cash account
the IRA at Interactive Brokers will not allow me to purchase it because it holds limited partnerships. But SEO, SOXX, TVIX are my current holds, adding to UVXY, VIIX, 2% account capitals each, final cut loss levels, today's low a day. You can do it however you want, but like I said, each time it moves lower, that new low a day is my then half sell stop until I have no more shares left. Now, I do have one long position I want to take for Thursday.
And that long position is a position I already have a stake in. ETRM was an early dip buy long signal, looking for an explosive move on the 13th. Kind of pulled back a little bit more on the 14th on Valentine's Day, but today we got that weaker open and stronger close, finally 764. So now that we got that stronger close from open, and it looks like it's going to print a candle over candle because 766 was the high day, got up to 7088 and closed near the high of the day. I want to go long another 0.25% of my account capital, right around $1,000 in the margin account with ETRM, using my first cut loss level being 711. 25% I'm going to exit there if it doesn't move higher immediately. 697 the next half, then another quarter will be at 594, and my final sell stop for now in the position will be 545. As long as it moves sideways, holds that max green bop, and doesn't sell off on heavy volume, the trade should be good. And I'm obviously looking for a move back to right around 1017, right around the 200-day moving average, which is around the 15, 16 level, and then ultimately I'm hoping that it can get back up to 3041. It might not happen, but with this nice calm setup at the 50% Fibonacci retracement level and the 50-day moving average with all that max green bop, previous accumulation, no distribution, it's very much possible. So ETRM, 0.25% of my account capital, right around $1,000 in the margin account. 711, 696, 594, right? Yep, 594 and 545 as the stop levels. But that's the only new long position. The of stocks, UVXY and VIIX are the two hedges I'm putting on for Friday. And let me go over here to my desktop computer so you won't be able to see it. But right now, the futures, currently the Dow Jones Industrial Average is down 0.8.12 on the S&P 500, 0.01 and 0.15. So if the volatility indexes gap up, I'm not going to chase them. They hit my limit orders, or they're going to run without me if the market decides to sell off on Thursday and Friday. All right, everybody. Good luck in your personal trading. I'll see you in the chat room.